Hey, traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. I hope everyone's been controlling risk, being patient this week, remembering the last week of the year can especially be a tricky one. Yesterday was a really great example of how we want to trade, even day trade through this time of year, which is, yesterday we put on a total of three trades, maybe four. And our first trade was gold. It was a loser. We took our we took our loss quickly, acknowledged that we were on the wrong side of the move, and took a loss while we could, not when we had to. That freed up dollars, that freed up bandwidth to focus on the next couple of trades, which was short bonds and short NAS. And if you kept an eye on the way the markets moved yesterday, by taking a loss quickly, acknowledging where we were not trading with edge, we were able to move on to two places where we were. Some traders added on long SPY puts on top of the long QQQ. And then that was our day. And it's okay. In fact, I recommend taking that loss quick, freeing up capital, freeing up attention, and moving on. And that's exactly what we're going to look to do again today. And that's really the takeaway. The calendar's pretty empty in terms of high impact, hot zones. And the idea that we want to put on longer term positions as we wrap up this year, probably not where I want to be either. We're still in the window dressing, window undressing, tax loss harvesting, Santa rally. All of this is overlapping as Friday is the last trading day of the year. Just remembering that just from a timing wise perspective, it's going to be tricky to say we have edge, meaning we have an advantage over the course of days, if not weeks, right? So we want to keep that in mind. Short term is fine, gang. There's nothing wrong with it. Remember, again, day trading, all that day trading means is that we're going to be flat at the end of the day. And day trading was the first kind of trading when Wall Street was literally a big field with a wall to keep the redcoats out, right? That's how far back day trading goes. All right. So with that in mind, gang, let's go ahead and jump into the questions, get through as many of these first come, first serve as possible. And let's get to it. So first up is, hey there, group, Cisco. Cheap way to play tech if Santa shows up. Sure. If that tendency plays out, of course. Let's go ahead and take a look. If I'm looking at Cisco and I'm looking at structure, which of course, to your point, inexpensive and based on a $47 stock and relatively affordable options that are quite liquid, therefore scalable, I'm with you. Darvis support, oversold stochastic. I believe, let's see, what's our volume picture look like? What's our V-score look like on Cisco? V-score is hugging the mean, probably not a terrific buy signal from a volume perspective, but from a price perspective, both Darvis and the slow stochastic, yeah, it looks like a good one. The closer we are to 47, the better for the long side, but I'm with you. If there's a place to fade a floor, what's a floor, gang? A floor is support, right? What's support? So let's think about all the different ways we can call the same thing. What is a price level where price is holding? It's a support level. Some folks might look at the horizontal level. Some folks might look at a trend line, right? It's a support level. Support is buyers. Buyers are demand, right? So whatever you want to call it, some people get really cutesy with the names, right? Let's just remember what it is. Economics 101 applies. Support is a floor. A floor is buyers. Buyers is demand, right? However you want to. So if we can find those levels, I'm with you. All right, next up, top spin. let's see. When does the V score play? When is it in play? Sure. When do we look at opportunities based on volume? The truth of the matter is always, right? Not to make it cumbersome and not to make it confusing and not to leave people who don't have the V score, not to say that you can't trade successfully without it. That's not true, right? But you do need to pay attention to volume. I prefer to look at volume through the perspective of standard deviation of the VWAP. Oh my gosh, Rog, what does that mean? Think of it as a moving average. Think of it as understanding where size is sitting based on price, right? Price based volume. Lots of ways to do it. V score just happens to be my favorite. But if you can pull up volume profile, we can do that on TradingView. If you can look at a point of control, value area high, etc., use it, right? Use it. And then once you add the V score to the mix, I think you're seeing things with a whole lot more depth. But that being said, if I'm looking at the V score, it's simply because let's go back to support and resistance. If buyers are a floor and a floor is support and support is demand, wouldn't I like to know how much size is sitting there? That's really it. So what I want to know is this support level, this floor, a level from which there's a lot of size and a lot of opinion, that concentration of opinion. Size matters, right? That's where I would add that V score into the mix. And there's never a time not to consider volume. I do want to know whether or not there's a floor or ceiling. I do want to know if there's support or resistance, but how much size is sitting there? That's going to help a lot. All right, next up is, let's see, click the like button and you'll see a cool animation. Oh, really, Mr.? Oh, YouTube does have that little now when you hit the like button. That is pretty cool. That is true. Thanks, sister. I appreciate it, gang. If it's moving the needle for you, I appreciate the comments, the feedback, the questions, a thumbs up. Absolutely. Absolutely. All right. Next up is, do I think Tesla is at a floor, otherwise known as, right, also known as oversold? Oh, Praveen, yes. So a floor, right? Oversold, support, demand, buyers, right? 5 different ways we can describe that level. Let's go take a look. Daily time frame of Tesla, and no. Here's why the no, and adamant one at that. We're in a downtrend. In a downtrend, again, my approach is there is no such thing as oversold. Oversold and overbought are states of balance. Could be a narrow range, could be a wider range, but it's kind of a back and forth sort of balance. The scales, they kind of teeter totter, but they're more or less holding some kind of equilibrium. A trend is the opposite of all that. An uptrend is an over exaggeration, right? It's an imbalance of buying, right, and a lack of selling, or at least not a lot of it. Going back to size, going back to participation. So no, I will not use the language of sort of the balance of chop or a narrow range in a trend, because a trend requires imbalance, an imbalance of opinion, an imbalance of participation. In the case of Tesla, more selling pressure than buying support. So no, friend, I would not think that yet. Now, there's a time that's going to make sense. And that's going to be likely going into mid-January to mid-February. So timing is going to start becoming interesting as we go into the first 2 months of the year. And that's where portfolio managers, hedge funds, money managers, etc., get to start with a clean slate. And they ask themselves, where is their potential upside? Does Tesla, I would throw Amazon in the mix as well. I would throw consumer discretionary. Does this trend lower forever? Of course not. Nothing trends lower forever. Is there going to be a time where there's a bottom picking season? Yeah, I do believe the first 2 months of every new year, if there's going to be bottom picking, that's going to be the time. So let's think about timing and behavior, and then let's look at it next year and see if we can't note that money's flowing into those corners of the market, those sort of, very, very beleaguered corners of the market. All right, next up, Prince. How long do I typically hold on to a swing trade? To Prince, this is going to sound like a sassy answer till either stops out or till it hits my target. That's really the truth. This idea that we can predict, I'm going to be in this trade for 6 weeks. I don't know, right? I think that a lot of traders think they can predict not only where price is going, but when it's going to get there. Kudos to that superpower. I don't think that exists. I think that's actually a delusion of a gigantic level. So I try not to enter that delusion of not only do I know where the markets are going to go, but I know when they're going to get there. If we stop and think about people saying, well, in February, we're going to do this. Really? I don't even know what I'm going to have for dinner in on Friday. And there's some guy on television or gal telling me that in February, we're going to see this, that, or the other thing. I won't go there because I don't know where price is going. Fun fact, and I'm not going to pretend like I do. So that's where I look at that. Um, let's remember, if it stops me out, I get out. If it hits my first target, I move to a break even, and that's really what I try to remember. So when would I drop it due to options losing value over time? Very interesting. Second part of the question, Prince. Remember that a lot of traders, again, I don't know anymore. I live in my little bubble of a world in the futures room and definitely the sector secrets mastery. And in that room, we have a philosophy. It's okay to pay for time. I don't want to pay for volatility. It's okay to pay for strike. Strike in real estate, location, location, location. I don't want to be out of the money. In or slightly at or slightly in the money. So now I've taken care of delta, even though I don't give a rip what the delta is. Anecdotally, observationally, I've noticed it's 50 to 70 at best. But 50 is usually a pretty common delta for me in terms of the synchronicity of the underlying to the value of the option. The piece of the puzzle where a lot of traders drop the ball, and I understand why they do, is they pay for very little time. And that allows them to A, play very expensive options, B, be very deep in the money, but what they've traded off, and it is a trade-off, is now they've cut the amount of time they have to be right. I don't want to do that because again, I don't know how much time it's going to take for me to potentially be right or wrong. I don't want to be at a disadvantage time-wise at the onset of my trade. So of course, once we get into under 2 weeks, under 3 weeks to expiration, we're going to see that the time decay, the rot of the option is going to increase. Right? That's it. That's not an even. It goes exponential as you get inside really 21 to 14 days. The idea is that at that point in the trade's life cycle, we're already hitting the T1. We're already seeing momentum in our favor, which helps offset that time rot, that time decay. And that's the way I look at it, Prince. All right, next up, Visa. Do I like Visa to the long side? I actually do. Is it a trend? It is not. Is it above the 200? It is. So there's a lot I like about it, but it's not a trend. Is it along on the daily? Absolutely. I do like I do like that setup. Ideally between, take a look at the automated support and resistance here, gang. I love this. Right? If you're not using the Darvis 2.0, which we have made free here at Simpler for a very long time, I think 2016. Uh, that's a support zone. What's a support zone? Buyers. It's a floor. It's demand. It's in the case of take a look here. In the case of a neutral market, this could be arguably oversold, right? So yes, in that zone, thank you, Darvis. Near the 200, thank you, Propulsion. I'll look for a long position. What is a symbol for dollar futures on toss? If you have, Mr. Walker, if you have the DX feed from the Intercontinental Exchange, the ICE, it's /DX. But unlike wheat and corn and S&P, etc., CME and CBOT exchange symbols, you're not going to get the gratis ICE feed from most brokers. So that's why when you pull up DX, you're just not going to see it. Now, I do have a DX feed, but I've got to pay for it. So there's your DX1, right? And then there's your data on it. So remember, if you want to be able to trade a number of symbols on the ICE, you need that You need that feed, which of the different exchanges, last time I checked, maybe it's changed. I don't know, but it's one of the most expensive, if not the most expensive exchange to subscribe to. So for a lot of traders, it's not super accessible. And but if you've got it, /DX. Just don't be surprised if it doesn't come up unless you've got that exchange feed. All right, next up, how do we determine a second target on the 6E? How to determine a second target on the 6E? Well, we do have a long position that we've been working on this one. I won't even think about a second target until I've reached my first, DC. So my rule is do not put a first target that requires brand new highs, that requires brand new lows, right? If you're short, it shouldn't need new depth. If it's a buy, it shouldn't need brand new height. A lot of traders love to put their first targets way out in the stratosphere. I think that's a tactical mistake. Remember, if we've stopped somewhere before, let's presume that we're going to stop there again. That's a logical first target. Move to break even because we don't want to let a winner turn into a loser. Second target, I take my sweet, sweet time because as much as I'm going to be prudent about the first target, not going to get greedy, I want to shift into full on greedy mode when it comes to T2. And I think a lot of traders do the opposite. They're extremely greedy for T1 and then they take T2 right away. So I want to flip that around, take T1 much more prudently, and then put T2 out in the atmosphere. So there'll be a period of time where I'm sitting at a break even after a T1, knowing that I won't let a winner turn into a loser, and then I'll wait. I'll usually wait a long time. Yesterday, for example, with our TLT puts, gang, I never really emphasized a T2. Why? That old saying, if your enemies are making a mistake, let them. Well, if a trend is going in your favor, let it. We ended up exiting pretty much due to time. So rather than scaling out too aggressively during all of this and then running out of contracts, running out of size, I left it alone. So if I do err on the side of being anything with the T2, I'm probably too greedy. I know. However, we do think about trailing stops. We do think about tightening the stop as it's going in our favor so that if we get a sudden reversal, we've locked in profit. So think about the way you're managing scaling out of trades. Now, scaling out of trades, sadly, has become a bit of a dying art because traders are very binary about point A to point B and then they're flat, which is really a tragedy, especially if we end up with trends and things like TLT and QQQ like we did yesterday, right? We want to think about where's that QQQ? Right in there, right? We end up with some nice movement lower. I don't want to get in its way. All right, next up, PXD. So wandering into some energy. Hey there, Dustin. All right, what do I want to do here? How about a short? Yeah, I'm fine with that. There's your 200. There's your wave. There's a Darvis, red trend. I do like that one. I would just check what else is moving lower. Make sure this is indeed the best short in terms of the zone and the structure. But I do like that one a lot. Yeah, take a look at XOP. Take a look at XLE. Heck, you could even look at FCG, I believe. But yeah, I would love for this individual boat to be following these tides. But I do like the structure. Good eye, Dustin. Yeah, I do like the structure very much. Absolutely. Okay, let's see. Next question. How are we on time? Got a little bit of time left. All right. Can I give some insight? Hey there, 403. Can I give some insight into some of the techniques I use to determine if the likelihood that a trend has come to an end? We can use ENPH as an example. Sure. Let's see what we've got here. So 403 ENPH is actually not an adequate example for me. I won't say a good example because it might be a trend for you. This thing hasn't been trending 403 since the 20th of September. So I can't really use this as an example because it hasn't been trending. If it were, let's use this period of time if you don't mind. So what I'm going to do is highlight this area. Got it? All right. How do I know the trend is over? Right there. Grab candles, wave. grab candles, wave, and then multi-trend. So what are the techniques? They're actually automated into the process. What's the color of the grab candles? GRAB stands for green, red, and blue. Red is the color of bearishness. Okay. The next thing I'm going to use is the dynamic support of the wave. Breaking it is going to trigger a change in the grab candles. They work together, right? 3, separate but important, is the multi-trend, which is studying the relationship between the 8, 13, 21, and 34 exponential moving averages on the close. When that shifts out of the green, I no longer have a trend. Remember, broken uptrends are not downtrends. Broken uptrends are chop with a bullish bias. So I'll still be looking for oversold buys, but no longer trending buys. And that's how I would look at EMPH. But as far as the trend goes, that thing ended in September. And I hope you can see how we've color coded that. It's kind of hard to argue with a color. It's kind of hard to argue with a traffic light. In my mind, early on as a trader, I thought my signals, my reads have got to be traffic light simple. It can't be open to a lot of interpretation. So I hope that makes sense. All right, gang. As always, thanks so much for the questions. Thanks for being here for charts and coffee, caffeinate, and dominate, gang. But don't overtrade. So maybe decaf and dominate. Be good to each other, gang. I'll see you tomorrow, same time, same station.